The housing market is shifting fast. I'm going to give you 3 strategies on how you can take advantage of it. The last strategy is one that I've been using the past 6 years, and it's allowed me to quit my job and have financial freedom. So first, we have to look at how we got here. It all stems back to inflation. Back in 2020, when the stimulus checks were printed, that spurred and accelerated inflation. Combine that with the supply chain and logistics issues, there was a lack of supply. So with more money but less supply, that imbalance caused prices to go up, which was a cause of inflation. So with more money, which increased demand, and a lack of supply, prices went up. So how this affected the housing market was that there was more demand for a home as interest rates were lower. Therefore, more people could afford a nicer or better house. Combine that with the lack of lumber, appliances, home renovation materials, that kept the supply low. So we have high demand and low supply, and that caused prices to shoot up, furthering the inflation. And now the feds are dead set on fighting inflation. So they've been raising the rates, and these rate hikes affect mortgage interest rates to buy homes. So now that the pricing of homes are starting to fall, the reason to this is now the interest rates are so high, it's a lot more expensive to buy a house. But that comes back to the demand coming down. People that were thinking about moving or buying a home, but already had a house locked in at a 2 or 3% interest rate, have no incentive to go pay for double in the interest rate for a house now. So therefore, the demand is now down to really those that absolutely need to buy a house now. Many renters are okay with renting a little longer now so that they can wait for the prices to come down or the rates to come down. Let's take an example of a $350,000 house. That was the average home price for a home in America in 2022. Back in 2021, you could put 20% down, so your loan would be $280,000, and then you could get a 3.5% interest rate amortized over 30 years. Your monthly payment on that note would then be $1,257. Now, if you buy that same house today at a 7% interest rate, your monthly payment jumps 50% to $1,863. That's over $600 more on the same house. So if your max budget was at the $1,250 mark, the most house you can buy now is a house that's $235,000. This has limited the buyer pool, which in turn has reduced demand on houses. So what this creates is now a buyer's market instead of a seller's market that we've seen the last 8 to 9 years. However, this downturn is different than 2008. There's still an inherent lack of supply in the housing market. And in basic economics of supply and demand, it really can't fall that much if the supply is not there. And the problem is the supply is not catching up. Home builders are canceling their new starts because they're scared of the softer market. They're scared that prices are coming down because buyers can't pay what they used to pay. And in turn for them, labor is still high right now. Materials have come back down a little bit, but they're still higher than pre-pandemic. So what they can do now is hope that they can wait it out and wait till the market gets better. However, that's not what they should be doing. If we want the supply and demand to balance back out and have a balanced housing market, they need to go hard right now and build more homes while the demand is low to catch up. So then this becomes a catch-22 for home buyers. Last year, it was so competitive, they said, okay, I'll wait till the competition cools down and then I'll buy a house. But now that competition has cooled down, they're saying, oh, but the interest rates are too high and too expensive. I'll wait until that goes down to buy a house. But guess what happens when interest rates do come back down in the future? House prices and demands will go back up. So you're stuck in this cycle that never ends. So after knowing all this, what can you do? Well, there's 3 ways you can take advantage of this housing crisis. First is to buy a fixer-upper on the market. Right now, a lot of investors and house flippers are pulling back their operations. This means there's less competition. This means you have more power now in a buyer's market to get a great deal. So what I did for my previous homes was I did this exact same method. That's exactly how I bought the last house I lived in and how I bought this house I'm currently living in. In 2017, I bought my first primary residence. It was listed on the market. It was a 4-bed, 2-bath, 2-car garage house, and I bought it for $67,000. I then spent $36,000 to renovate it, and it appraised out to $170,000. I was then able to do a cash out refinance where I pulled out all the money that I had spent plus an additional $40,000 tax free. I later sold the house in 2021 for $195,000. This house I'm living in today was the same thing. I found it listed on the market for $40,000. I negotiated the seller down to $32,500 and I bought the house. The next thing I did was I did a full gut renovation that cost me about $60,000. I then did a cash out refinance like I did last time, and the house I'm in now appraised out to $140,000. So if you're worried about not having the money to do this, don't worry. There are people out there or companies out there called hard money lenders or private money lenders. They will lend or fund the purchase and the rehab of the home, and then you can refinance into a traditional mortgage when you're done. And if you are looking for a home already, you probably have some money saved up for the down payment. Instead of a down payment on a traditional mortgage, you can use that down payment on a hard money loan. Now, if that's too much work and effort for you, the second option is to buy a house with an adjustable rate mortgage. What an adjustable rate mortgage or ARM loan is for the first 5 or 7 years, however long you set the period of the loan to be, the interest rate is fixed. After that initial period is up, the interest rate can fluctuate based on the market movements. It can go up or it can go down. So these ARM loans have a bad rep from 2008 housing crisis. What people don't realize is the people that got burned in 2008 were the people that had their adjustable rate mortgage come due in 2008, 2009. That means if they had a 5-year term on the loan, then they took the loan out in 2003 or 2004, they got burned in 08 and 09 when it came due. Right now, the rates are going up now, and most economists predict that in 2 to 3 years, the rates will come back down. So what you can do now is buy a house on an adjustable rate mortgage for a 5 or 7 year term and then refinance it down the road. Obviously, no one knows when rates will come back down or go back up, but we are looking at historical trends. I'm actually doing this strategy right now on an Airbnb property that I finished renovating. Instead of refinancing out to a traditional mortgage at 6.5% or 7%, I can get an adjustable rate mortgage for 5 years, and I could buy down the rate to as low as 3.75%. The third option is to find off-market discounted properties direct from the seller. This is what I've built my real estate business around. This is what's allowed me to quit my day job. This is my belief is the number one way to generational wealth that the common person can do right now is this strategy. So this is a complex topic that I'll deep dive over several videos on my channel, but the gist of it is you find motivated sellers with some type of pain point that are willing to sell their properties at a huge discount in exchange for convenience and speed and ease of transaction. Some of these pain points are landlords that just evicted a tenant or someone behind on the property taxes. This is a great way where you can pick up houses for 50 cents on the dollar, and sometimes they don't even need a lot of work. And to find these sellers is actually quite easy. You can go down to your local county courthouse and ask for a list of recent eviction cases that were filed, or to your county tax assessor's office and ask for a list of tax delinquent properties. This is all public information that everyone is entitled to. So once you get that information, normally it will include the owner's name and the mailing address of the owner. With these two pieces of information, you could send a letter or a postcard asking if they're wanting to sell, or you can do something called skip tracing, which is where you can use that information and look up the phone numbers of a person. And then you can call or text those phone numbers asking, hey, are you interested in selling your property at 123 Main Street? Like I said, I can get into all the details and the nitty-gritty, but that's gonna take hours and hours of video. The point of this video is just to give you guys a general idea of how you can take advantage of this current market shift. Don't sit on the sidelines and miss out. There's a saying in real estate that goes, don't wait to buy real estate, but buy real estate and wait. Recessions are normally when the transfers of wealth occur. So please, I hope this helps you take some kind of action to be able to capitalize on this market shift. So for more tips on how to do this, and for financial freedom, please subscribe to my channel as I'll break down all the tips and tricks I've learned over 6 years of doing this and how it's led me to create a life I love, how I can quit my day job, how I can travel the world now. All this comes back to this real estate business that I've done. So please leave a comment below about a certain topic you want to learn more about and I'll make a video. I'll talk to you guys next time.